Bill Miller, volatility is the price of return. Brilliant investor. No, Dom, I wouldn't be 100% invested in Bitcoin because I am not 100% certain it is going higher. I believe it is, but I cannot possibly be 100% certain about it. What I am 100% certain of, and this is what you have to bank on, fiat is programmed to debase. That is the certainty. That is the math. That is the mathematics of a debt spiral where they have to print money to meet the interest expense obligation.
ARK Invest, one of the high-profile companies vying for a spot Bitcoin exchange-traded fund ETF, has amended its SEC filing to add a surveillance sharing agreement. The change occurred a week after BlackRock filed for its spot Bitcoin ETF, which did include such an agreement. As ARK submitted its proposal to the SEC in April, nearly 2 months before BlackRock's application, today's revision could help ARK cross the finish line first. A surveillance sharing agreement, SSA, refers to information that is shared with regulators in order to prevent potential market manipulation. This includes market trading activity, clearing activity, and customer identification. The SEC has been adamant that none of the applicants has proven that they can adequately protect investors against manipulative practices. Greg Foss, who currently works as the Executive Director, Strategic Initiatives for Validus Power Corporation, with 32 years in high-yield credit trading and analysis as PM and trader, and a well-known Bitcoin enthusiast or realist, shares his view on ETFs and why its adoption by the mainstream may be delayed even after getting approval from the SEC. He also shares his views on bonds and other investment assets and options. As we get into the video, don't hesitate to give us a like, subscribe, and drop your comments as you watch.
So I've never seen a simpler investment decision in my life, which is to move some of the exposure from government bonds, which is a soft asset, into the hardest asset that man has ever created. It's called Bitcoin, and you don't need to have 100% of your portfolio in it. But if you did, you'd only have to employ one person. And maybe there is the efficiencies that come with that. I am not advocating 100% position, though, for Ontario teachers, but get off of zero, please, on behalf of all of the hardworking Canadian teachers that perhaps don't know how to manage risk themselves. Not your keys, not your coins. 100% true. But let's understand that there's tax-advantaged accounts in Canada in which the government essentially gives you a 50% tax rebate if you own Bitcoin in Canada, called your RRSP, which is a registered retirement savings plan. I'm a huge fan of cold storage. I own Bitcoin in cold storage, but I also own Canadian ETFs because I view it as, in my tax advantage account, I can get $1.50's worth of Bitcoin for $1 investment equivalent. Okay. And that's important. And, you know, you have to balance the risks and returns. I'm proud that Elliott is one of the multiple ETF providers in Canada. I believe his pricing mechanism is one of the most ingenious of the products out there. But talking bigger picture, it is important to understand that a lot of people, particularly my age, love Bitcoin when it has a QSIP attached. And that's lost on a lot of people. For those out there that don't know what a QSIP is, it's an identifier for any exchange-traded product. It will identify alphanumerically whether the product is an ETF, a bond, a stock, all of these things. But when you manage money and your systems are predominantly set up with an identifier as being one of the main, probably the key component of any database, once it has a QSIP, you open Bitcoin ability to be allocated anywhere and any analysis. There's so many legacy platforms that probably, you know, couldn't even accept Bitcoin until it has a QSIP. So well done, Elliott. The Canadian government is subsidizing your purchase of Bitcoin. I'm all for that. And that's why I would hold both. Ultimately, cold storage is the solution. But in terms of tax advantaged accounts, bring it with an ETF and low basis risk, high liquidity, good market makers, creation redemption features. I believe it's all good for the ecosystem. It's just one more on-ramp.
Bank of America is bearing the cost of decisions made 3 years ago to pump the majority of $670 billion in pandemic-era deposit inflows into debt markets at a time when bonds traded at historically high prices and low yields. The moves left Bank of America the second largest U.S. bank by assets, with more than $100 billion in paper losses at the end of the first quarter, according to data from the Federal Deposit Insurance Corporation. The sum far exceeds unrealized bond market losses reported by its largest peers. Greg Foss says you should get out of bonds, and you are about to hear why he makes such a comment.
You know, coming from the bond markets, I do appreciate the liquidity that's provided in global global bond markets and the U.S. bond market in particular. I mean, that allocation up there at 27%, that's high. I will note that it was probably higher, and on a mark-to-market basis, since most global bonds have been shredded in the last 2 years, it's come down, or they did a proper duration exposure. That being said, I wrote a paper on this. It's what sort of got me some Twitter fame, is why every fixed income portfolio, every single fixed income portfolio in the world, in my opinion, needs some allocation to Bitcoin, which means my first and favorite spot of taking an allocation from is from the bond portion. Now, I may argue that Microsoft at 7% of the portfolio, damn, those are some pretty big gonads these guys have, that they're rolling the ball on Bill Gates. Well, not Bill Gates anymore, but you know what I'm saying. There's mixing and matching that can go on. So I would take it out of the bond market, but I'm not fussy. I just need to get it into Bitcoin somehow. And then, more importantly than perhaps the allocation, is your rebalancing assumptions and how you're going to monitor that position and manage the risk according to the price swings. And that can be the difference between positive returns and negative returns if you're effectively dollar cost averaging in both directions. So, you know, there's big decisions to be made here. Once again, we have a tool that you can get to the brass tacks on, which is the Nakamoto portfolio tool that Hafa has put together. I'll just say this. I already know what my answer is, and it's crazy, but it is far higher than the 2%, but it's not the 25% allocation that is the optimal, okay? We're not arguing with anything here. The optimal portfolio allocation, according to Hafa's math with respect to the asset allocations that the teachers have made, is a 25% allocation to Bitcoin. Oh my God. Because at the end of the day, this fund, if I'm not mistaken, what's the size of the fund? Hafa, at least 400 billion US dollars, yeah?
250 billion, I think, right around there.
It's only okay. I'm disappointed. Come on, teachers, get your contributions higher. But anyway, as pension funds go in Canada, that's still huge. The largest fund in Canada, if I'm not mistaken, is somewhere around 600 to 800 billion. But that being said, imagine if you're still 250 billion, and all of a sudden you're putting 25% of your portfolio in that. That's $50 billion of buying into one fund, into a $500 billion asset class. You couldn't do it. It would be impossible. So you have to consider the liquidity constraints in the market as well. So I know my number. Wait until close. I'll wait until the next boys give their things. It's more than zero, and it's not as high as 25%. But come out of your bond portfolio, please.
Wealthy UK investors are racing to buy tax-free gilts, according to new figures, as yields soar. New figures from Interactive Investor show there had been an almost tenfold jump in direct bond trading in the year to date when compared with the same period in 2022. Almost all of the activity was concentrated on gilts. It comes as more investors seek to take advantage of the financial planning benefits that come with owning gilts, and that they are free from capital gains tax on any profits made when selling or redeeming the bond. Short maturity gilts are in particular demand, according to Interactive Investor. Sam Benstead from Interactive Investor said, cuts to the tax-free capital gains allowance are making gilts an even more effective way of reducing tax bills. He said the most popular bonds suggested that investors are holding the gilts to maturity, locking in yields of more than 5%. The bond market has been warped by expectations that the Bank of England can only tame inflation by pushing the economy into contraction with ever higher interest rates. The SEC has yet to pass an application for an ETF based on the underlying Bitcoin asset, which is traded on unregulated exchanges. The agency says it cannot offer investors guarantees the market is free from fraud and manipulation. The only crypto ETFs the U.S. has approved are based on Bitcoin futures contracts, which are listed and monitored on the Chicago Mercantile Exchange, a regulated market. Both ETF and crypto markets are hoping to ride in BlackRock's slipstream. Invesco, WisdomTree, Bitwise, ARK Investment Management, and Valkyrie have all had spot Bitcoin ETF filings rejected in the past, but have refiled their applications with some modifications. ARK is ahead of BlackRock in the filing queue, with the SEC due to make a ruling on its application by August 13. The discount to the net asset value of the $18.9 billion Grayscale Bitcoin Trust, GBTC, the world's largest crypto fund, has narrowed sharply to a 9-month low of 31.3%. Grayscale is suing the SEC for its refusal to allow it to convert GBTC into an ETF, a move that, if allowed, would probably see the discount disappear. Part of the optimism stems from BlackRock's formidable record. According to Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, the asset manager has had 575 filings approved by the SEC and only one rejection. He put the odds of approval on this occasion at 50-50. With ARK investing now in the ETF race, who do you think would get it first? BlackRock or ARK Invest? Let us know your choice in the comment section below. Please don't forget to support us by hitting the like button, subscribing, and turning on notifications for future videos. Thanks for watching.